Hi, everyone. This is Ali Hussein Kasim of Ali Talks Tech. This is our first weekly roundup of 2024. I must admit we've had a kind of a bit of a slow start, but we are going to be moving from now onwards. This week we are covering a couple of quite interesting stories. The first one for me that really caught my eye today is the minority investment by Mastercard into a new Fintech vehicle owned by MTN Group. So MTN Group has formed a vehicle, special purpose vehicle, or a fully owned subsidiary called MTN Fintech BV. This will basically cover all MTN's mobile money fintech operations across Africa. Now, this is a pivotal deal. And let me explain why this is important. And this is pivotal in terms of going forward when you look at fintech, mobile money, financial services rails across Africa. There are two key players in the mobile money market in Africa. So when I say two key players, I don't mean that there are no other players. There are quite a number of other players. But the two key players, who I will call the bull elephants in the savannah of mobile money across Africa. That's MTN Money, or Momo as they like to call it. That's mobile money. And M-Pesa Africa, which is a joint venture between Vodacom of South Africa and Safaricom of Kenya. Remember one thing, a couple of years back, Safaricom and Vodacom came together and transferred shares or created a joint venture. Don't worry too much about the corporate jargon. The end result was simply that M-Pesa Africa was founded. If you look at these two key players, MTN Momo and M-Pesa Africa, each one of them has about 60 million users of mobile money, regular monthly active users of mobile money in their ecosystem. Now, on one side, you have the major global payment players like Visa and Mastercard. And on this side, you have the major key players of mobile money in Africa. That is M-Pesa Africa and MTN Mobile Money. Now, the global players have, despite the fact that they are almost literally dominant across the world when it comes to card payments, Visa being the bigger one, Mastercard coming a distant second. If you don't talk about China, because you've got now Union Pay in China. Africa is greenfield, literally. Why am I saying greenfield? Despite the so-called dominance of MTN Money and M-Pesa across certain markets in Africa, Africa still has 1.3 billion people, 1.4 if you listen to others. Then you've got these card players who really have not, outside of South Africa and some Northern African countries, and to a smaller extent Nigeria, they haven't really penetrated the market. If you look at Kenya, for example, a key fintech market, card transactions make up only 2%, in some cases going even below 2%. So why, you would ask, is Mastercard and Visa now vying for each other, against each other, to get a grip into the mobile money market? I think the answer to that is a no-brainer. We'll be seeing how this pans out. We'll also be seeing whether the spin out of M-Pesa Africa becomes complete, or is it just de facto, and whether M-Pesa Africa will be a would be talking to Visa or any other card or fintech, global fintech player. Interesting times ahead. We'll be talking a lot more about this deal and what it means for the Pan-African financial services ecosystem across Africa. One last thing to note, slightly over 15% of all payments across Africa are card payments, and that is skewed mostly, again, most of the transactions coming from the Southern African part of the continent and the Northern Africa part of the continent. We're also covering an interesting story coming out of Ghana today. The Bank of Ghana, which is the central bank of Ghana, has just licensed Lemfi, which is a fintech operating across several markets in Africa, given them a remittance license. Remittances are a key source of hard currency into Africa. It's huge in Nigeria, Ghana, Kenya, Egypt, South Africa are actually major recipients of remittances into Africa from diaspora. So for a fintech to receive a central bank license anywhere in Africa is a major win. For too long, tech companies, especially fintechs, have not really understood how to navigate this regulatory and policy ecosystem. Looks like we're getting smarter and smarter every day when it comes to how to engage with. So this is a win. This is a win for the fintech ecosystem across Africa. And we envisage a lot more of these stories to continue happening so that they don't become major stories. They become the norm. The third story I'm talking about today is DRC. DRC, surprise, surprise, is emerging as an interesting tech ecosystem into Africa. I was reading a story here today and yesterday. The Democratic Republic of Congo, DRC, which is known for its abundance of natural resources, is now starting to carve a very interesting and prominent position in the African tech arena. In 2023, the country secured an impressive $62 million in startup funding. Now, that may be minuscule if you consider the amount of money that big players in the continent, when it comes to tech ecosystems, actually attract, the likes of Nigeria, Kenya, South Africa, and Egypt. However, we are starting to see that DRC is taking an interesting position within the Central Africa region. So this is congratulations to the ecosystem there, and we hope to see more interesting stuff coming out of the region. The other story I'm covering is Apollo Agriculture. Apollo Agriculture is a Kenyan Agritech that has secured $10 million more funding to expand into Africa. Now, why is this important? First, for me, I have been a big proponent of not just talking about raising funds, but talking about what the tech ecosystem across Africa is doing. What is important for me when I look at Apollo? Apollo has stuck to its core, which is Agritech. And Apollo is simply saying their core is they specialize in aiding small-scale African farmers by offering access to financing, top-notch farm inputs, insurance coverage, and personalized advice. They operate offices in Zambia and the Netherlands and Kenya. Apollo has generated a total of 64.7 million in 10 rounds. This is a lot of money from an African perspective. Its latest injection of funds will play a pivotal role in Apollo's plans to broaden its reach within Kenya, extending financial support and digital tools to a larger network of farmers. I intend to reach out to the Apollo founder and CEO and have an in-depth conversation about the impact they're having across the markets that they're already operating. Agriculture is super important for Africa, and we cannot, as a continent that has 60% of the world's available arable land get snookered by some war in far-flung Ukraine or any other country. We have the means to feed ourselves, and we look upon different players to make sure that that happens. My last story is on Nigeria's Japa economy. For Nigerians, Japa is not something that is new, but for many other African countries, it may not mean something to them. Nigerians are moving out of the country in droves. The Japa economy simply means somebody is taking that gap, moving out of Nigeria to go find better, greener pastures in the Western world. In the Japa economy, Nigerians sent back $20.5 billion into Nigeria last year. This is 38% of total remittances into Africa from African diaspora. That's a huge amount of money from one country. Why? I continue to ask myself this question. Why is it that many Africans are still moving out of the continent? And this is young, intellectual Africans who may just be going for blue-collar jobs, but you are also talking about highly educated Nigerians and Africans who decide to spend their lives, their economic lives in other countries. This is something that Africa needs to really, really pay attention to. If one of Africa's greatest exports is human resources, why then is this capital not remaining in Africa? This is a question not just for African leaders, but for all of us as Africa. This is it for this week's Ali Talks Tech Weekly Roundup. Looking forward to seeing you guys again next week. Thank you very much.